what I would really recommend is setting up a self-invested pension scheme for yourself, a SIP, as a company director. It is, again, a tax-deductible expense. You can pay in up to £60,000. So if you've got £60,000 profit, you literally can pay that into your pension. Number one, it will make your company profit go down to zero, so there's no corporation tax. But number two, you've also invested in your future.
Hi, this is Max, back with the podcast, and I'm here with Benedicta.
Hi, I'm Benedicta, founder of Benny Ratio Finances. I am a qualified accountant and what I like to call a finance professional. So I deal with all things finance. And I use my business, Benny Ratio Finances, to help individuals and company owners with their business, accounting, finance, and tax needs.
Okay. And I was reading through your bio, and you've got quite an interesting background. So you're a qualified accountant.
Yes. So I qualified back in 2017 now, but I started the journey 2014. So it took roughly 3 years. I was doing that part-time whilst I was working. And so I am CIMA qualified for anyone who knows the differences. There's like ACCA, CIMA, ICAEW, and so on. So
so we've got an accountant in our team, and she's ACCA. But I know a lot of public sector, CIMA. And so tell us a little bit about your working background before you decided to sort of take the entrepreneurial route.
So as I mentioned, I call myself a finance professional because I've literally never worked anywhere else outside of finance. So at uni, I did a business economics degree and they forced us to do accounting modules. Before then, I had not done or was not even the slightest bit interested in accounting. And they made us do financial accounting and they made us do management accounting. And so when I did my management accounting in my second year of uni, I was like, wow, this is amazing. Like, it was teaching me stuff in uni that I was already doing outside. So for me, I was like, okay, I'm going to take the safe route. I'm quite a risk averse person, although I do believe in, taking calculated risks. But, I was like, take the safe route. I know I like business. I know I want to do entrepreneurship. However, let me become an accountant because at least I know if everything goes wrong, I'll always have a job, right? An accountant must have a job in any company, right? So I said, I'd take the accounting route. And so what I did in my second year, I went on a placement year I had applied for a placement year, which was actually at the NHS. So they were going to take like a couple of us, 30 or odd from our uni, and they were going to spread us into all the different trusts in the UK. And when I did that interview, they were so impressed and they were like, you did amazing. And so we're not sending you to the NHS, we're sending you to the Department of Health. And I was like, the Department of Health, what is that? Obviously, I'm like, I would have been 19, 20, I didn't know much. And so I realized eventually I found out that the Department of Health is the government organization that actually gives funding to the NHS. And that's where all the government money comes from and then is then dispersed into organizations like the NHS. So I was sent to the Department of Health and I was working in the finance team, and literally that is the beginning of the story. I worked since going there. They kept me on after my placement year, so I was working there part-time in my last year. Once I graduated, I got a grad job, higher pay and all of that. So I went through a number of different government organizations, and then eventually I went into consulting at one of the top 4 accounting firms, where I worked there for about 3 years and have also worked for other accounting firms as well, another one of the top 4. And then, but the whole time, to be fair, my parents are serial entrepreneurs, so I never stopped doing something on the side. And so, as I got qualified, I then, had the braveness, to go out and then begin to do accounting for customers.
So in terms of, you say your family are serial entrepreneurs, does that mean that money was discussed quite a lot at home? Business was discussed?
Was money discussed quite a lot? I wouldn't say it was, but I would say not directly, but indirectly, maybe, if that makes sense. So I saw my parents doing things with money. I wouldn't say we discussed it and sat down, right? This is how much we have as a family. Not necessarily. However, because my parents were entrepreneurs and I'm the first child, I actively saw and participated in their business activities. So what do I mean by that? So my dad, for example, he had a shop in New Cross Gate. So after school or, I'd sometimes go and work at the shop, on the weekends and stuff. And obviously I'd, take money from customers, put it in the till, and he'd also give me something. Similarly, my parents also had a business where they would take stuff from the United Kingdom, like electronic items, and send them back to Nigeria, and they would sell them. So on the holidays as well, I'd go to Nigeria, and I remember when they would sell stuff. So I was always there when they were doing business transactions, if that makes sense. And so, obviously the customer gives you money, and I'd help to count the money, that kind of stuff. And also my parents were landlords. So I remember hearing them having conversations, your rent is due or the rent has gone up, so there were money conversations around me, but I won't say that they explicitly sat down and talked to me about money, but I was definitely, I guess subconsciously taking it all in, basically.
I think there's something about being the eldest daughter as well, where we are just more aware of the adult conversations. Yes, we hear more than we probably should. And you talk about, obviously, you grew up in an entrepreneurial household. What are the successful habits that you've seen for yourself, but also your parents and maybe other people in the family that entrepreneurs have?
I would say being brave and taking risks. I talked about at the beginning of this how I was trying to be risk averse and do the accounting thing, but that I was doing that because I knew that I might go and do something risky on the entrepreneurial side. You can't be an entrepreneur and make your own money without being brave and without taking risks. Like, you are literally going out into the big wide world and you're saying, hi, I've got a product, come and buy it. Or you're saying, I've got a service, come and buy it. Or you're putting yourself out there and saying, listen to me. It takes a certain level of bravery. It takes a certain level of stepping outside of the box to be able to do that. And so I would say that I've seen that majority of entrepreneurs are bold and they take risks, again, calculated risks. But the other thing I would say is the work ethic. My parents, myself, and people that I know that are successful, the work ethic is 0 to none. You might see somebody on the internet and they've gone viral, or it looks like they're making £1 million or 6 figures. The amount of work that goes in the background to make 6 figures or to go viral, it's a lot. And so a habit is the habit of working, and there's no off time. There's no switching off your laptop. Oh, it's 5 p.m. I'm going to go and have a drink, Many times it's all night. And don't get me wrong, I know that that's not healthy for a long period of time, but especially in the early stages when you're building, it's very necessary. I don't know any successful person who does not work hard. And so, hard work is very important.
And so when people come to you now and they're sort of like, okay, I need help, what do they typically come to you with? Is it problems around tax? Is it accounting type problems? Or is it more around sort of financial advice?
So I do get some people trying to come to me for financial advice, and I always have to caveat, I am not a financial advisor. I'm not regulated by the FCA or anything like that. So I do not bear the title of financial advisor. I am an accountant. And so when people come to me for financial advice, what's the difference between financial advice and accounting advice? So financial advice is when you're asking for things to do with like wealth management. You're trying to manage like your assets, your trust, wills and pensions, that kind of stuff. So I'm not legally approved to advise on that. But as an accountant, I am legally advised, and I'm, regulated by my accountancy body, SEMA, as a member in practice to give advice that relates to tax. So majority of queries that I deal with have to do with, I want to pay less tax in my business, or I'm a high earner, or I need to do a self-assessment. All of those kinds of individual and family business tax needs is really where I get involved. And of course, managing the accounting affairs of businesses, because ultimately that's what my business does, right? We do your accounts, we do your tax returns, but beyond just doing it for you, which is what the typical accountants do, we try to, or I am very particular about trying to educate you so you know what you are to do as well, so that you're not just giving it to your accountant and they're doing it. You are also understanding what you can do, what's good, what's not, and all of that.
And what are the common tax mistakes that you see?
One of the common tax mistakes, I don't know if to call it a tax mistake or one of the common mistakes I see is where entrepreneurs, especially for people who are only doing entrepreneurship, you don't have another job or any other income, they register a limited company. Now, registering a limited company is not bad, but I would say I see many people do it prematurely. So even students, so I do get, students, I do talks and all of that. Students reach out to me as well. You're in uni, you're not really earning that much, but then you've registered a limited company. Now, what happens when you register a limited company is that from that day, exactly 12 months time, HMRC will be expecting company accounts from you. You technically also become self-employed because as a director, you can take out money from the business. And so there are a number of administrative things that are ticked off by that one go on Companies House where you registered your company for now 30 something odd pounds before it used to be 10, then 12. There are a number of things that are triggered, but then you find that these people, they're not actually earning any other money, but you've now subjected yourself to, number one, having your money semi-trapped in a limited company. You've also subjected yourself to high accountancy fees, administrative work, paperwork, and all of that, and it's all done prematurely. Now, I always advise that people should speak to an accountant before they register their company, as soon as possible. And of course, if you haven't, it's fine. You can still speak to someone, post. But ideally, if you're in that situation where you're an entrepreneur, your business is new, you're not earning that much money, I would say that you should actually start off being self-employed and have a limit and leave the limited company to later on down the line. Don't get me wrong. There may be other reasons why you want to register your business as a limited company. For example, if you're in a trade that's in a field that's regulated, health and safety, that kind of stuff. However, for the majority of people who are just doing, coaching or, things that are not too regulated, I would say that you can start off being self-employed. That way you can get all your personal allowance. You can earn all the way up to 50,270 and still be paying 20% tax. When we recommend that people should open up a limited company is when you already have a job or other sources of income that have taken you into that 50,000, 51,000 kind of salary aspect. That's when we talk about limited company.
Yeah. So it's really about the amount that you're earning and people waiting until they're going to hit that threshold. I think it's the same with VAT, isn't it? It's like a lot of people register for VAT straight away.
Exactly. And that's and I'll be honest, my fellow accountants, I get people come to me and they're like, oh yeah, my accountant registered me for VAT and all that. I'm like, you don't need it. But I know that some accountants register people for VAT because then they can charge them for the VAT services. For me, I am not that kind of accountant. I'm not hungry. I'm not desperately looking for your money. I want to give you, the best advice for you. And so, you don't legally have to register for VAT until your business has earned over £90,000. It used to be £85,000, but now for this financial year 2024 onwards, it's now £90,000. So don't stress yourself with all of that kind of, admin to do with VAT if you don't need it.
And I think it's that as well as I think it's maybe people identifying early on with the help of an accountant what kind of business they're wanting to be in. Is it a lifestyle business or is it a business where they will have to sort of put in proper structures? And so in terms of things like charitable donations and contributions, how can they be used, especially, a lot of people give back to their communities.
Yeah. So one thing that you must recognize is that charitable donations are a valid business expense. And so if you do have a limited company, even if you don't have a limited company, charitable donations are not a valid business expense if you're self-employed. But if you're a limited company, they are. So if you're a limited company, it will reduce your corporation tax. However, the hack with the charitable donations, even when you're self-employed, is that if you are a high rate taxpayer, so if you're in that 50K and above, then you can claim back via a self-assessment the 20% extra tax that they would have taken, because charitable donations are meant to be tax free. And so when you're a high rate taxpayer, you've already paid 40% tax, and then now you're giving to charity. So if you put that on your self-assessment to show that actually I gave X amount to XYZ charity that is registered, gift aid, they have a charity number, all of that kind of stuff, then you can claim back the difference. So that really helps in terms of getting tax refunds.
And I think, a lot of the time when we hear about certain celebrities getting sort of stung by a huge tax bill, first of all, why does it happen? And two, what can entrepreneurs do to prevent it from happening?
So this goes back to the common question that everyone always says to me, oh, Benedicta, I want to pay as least tax as possible. So as you can imagine, as a celebrity, you're earning millions, you still want to pay as least tax as possible. And so I can't speak for every single case. I can't speak for every accountant, for every celebrity, each case will be different. But generally speaking, I believe that it stems from that, because what happens is that they try to, I would say, avoid declaring some income. At the end of the day, income tax is paid on money that you earn, right? So if you say you earn 0, then there's no tax. Or if you say you earn 50,000, you will pay tax on 50,000 rather than 100,000. So what I think happens there, like I say, don't quote me, every case is different. What I think happens there is that you find that people are hiding money, or they're receiving cash in hand, or they try to put money in somebody else's name and somebody else's account and that kind of stuff. And when they are thoroughly investigated, it comes out that, okay, this person had declared on their tax return or in their accounts or whatever that this was their income was 5,000, but actually the income was 20,000. And so that's where you see, okay, that extra 15,000 that you didn't pay tax on, number one, you need to pay tax on that. And number two, the other thing that people don't realize is the interest. So if, let's say, that tax should have been paid in 2015 and now they're investigating you in 2024, apart from the taxes due, technically HMRC also have the right to slap on 9 years worth of interest that should have been gained on that.
Right, so that's where they get stuck. So how can entrepreneurs plan for paying tax? Because I think I've been stung a couple of times. So I've had examples. I mean, I've had a business for 20 years, but I've had examples where it's like, oh, your director's loan is so high, and you know what I mean?
Yes.
Those kind of things.
Yes,
how can entrepreneurs avoid those little pitfalls?
Yeah. So exactly what you mentioned now, director's loan. So one of the things that people don't recognize is that when you have a limited company, although it is your company, it's in your name, you don't have the right to just spend from the company. So the example I like to give is, imagine if you bought shares in Apple or you bought shares in Coca-Cola, for example. You do not expect the CEO or the director of Coca-Cola to just be spending from, the company bank account, right? And it's a similar thing with your business, because you're a shareholder in that business, whether it's Coca-Cola, Apple, or your business. You expect the company's operations and expenses to be entirely in line with the company operations. So therefore, I don't expect to see Benedicta's rent going through Benny Ratio Finances, right? That's a legal company. And so when you do take money out now, especially for smaller business owners, which is needed, right? Because that's how you're earning your money. If you're not taking it out as a salary, or you're not taking it out as a dividend, whenever you do take the money out, it's actually classed as a loan. And what it is saying is that you owe the company this amount of money. You've borrowed that money from the company, even though I know you're going to say it's your own company, it's your own money, it's your own business. That's not quite how it works from a document point of view. But like you said, you do have the right, and it is legal to take a loan from the company. However, if that income is not paid back into the company over a certain amount of time, so normally I believe it's within 9 months of the end of the accounting period, if that money isn't paid back, then it is now classed as income for the director. And so therefore, you need to pay income tax on it. Now, it's important to recognize that there are two types of tax. There's a tax, which is a corporation tax via the business, but then there's a income tax for you as the individual company director. And so as a company director, that's where they are saying that loan that you took from the business is income. And so on your self-assessment as an individual, you then need to pay income tax on that. And so in terms of preparing and being, ready for it, there's a couple of things. So I actually have a template that I put together because of this, right? Loads of my customers, how do I know how much tax I'm going to pay at the end of the year? How do I prepare for it? I actually put a template together whereby you can put in your numbers, how much income you think you're going to earn over the next couple of months, what you think your expenses are going to be, and therefore we calculate for you how much tax in line with the current tax rates, because obviously the tax rates change sometimes in the different years, how much tax we think you're going to pay. So let's say you think over the next 12 months you're going to earn 100,000 and you anticipate that your expenses are going to be £50,000 over the next 12 months. We can then say to you, right, okay, so on that 50,000, your tax is going to be 19%, let's say around 10K. And so once you know that amount that you think that you might be due to pay, you can then divide that into 12, for example, and say, okay, I know I'm going to pay 10K at the end of the month, so let me save 1,500 or whatever it is, every month. It's the same way that you would budget for your personal expenses, right? If you've got a holiday coming up, you would want to plan and save for it. If you've got tax coming up, you want to plan and save for it. And it starts by knowing how much is going to be needed.
So I think sometimes the business is making a lot of money, and then you're sort of thinking, well, what am I going to do with this money? Because you can't take it out.
You can, but you will pay tax.
Exactly. So what are some sort of efficient ways of people using the profit that they make into the business?
So one way I would say, and this is not even necessarily what I'm about to say is actually killing two birds with one stone, because when you're an employee, your employer and the government largely are helping you to think about your future via things like pensions. I don't know if you know that there's something called auto enrollment. So if you're an employee in an organization, you've been there you have to have that your employer legally has to register you for a pension, right? That is helping you save towards your retirement, and they match it, and there's all kinds of schemes going on there. Now, when you're a company owner, an entrepreneur, many people don't think about that, right? Because you're the boss, right? So unless you register yourself, you're not actually preparing for your future. And so what I would really recommend is setting up a self-invested pension scheme for yourself, a SIP, as a company director. Number one, you're going to start saving for your future, which is important for when you retire and you're not able to do your business in the way that you do it. But number two, it is, again, a tax deductible expense. And you can literally pay in as much as you want within the limit. The £60,000 per year limit used to be 40,000 last year, now 60,000. You can pay in up to £60,000. So if you've got £60,000 profit, you literally can pay that into your pension. Number one, it will make your company profit go down to zero, so there's no corporation tax. But number two, you've also invested in your future. So that's one of the ways that I highly recommend.
Yeah, I think it's difficult for a lot of people because they're looking at that money and they're like, well, I want to take it out. I want to use it now. But you're right. There needs to be something. And auto enrollment, I think, is it 3% and 5%? So it's you're meant to contribute 5.
Yes,
and then
you contribute a percentage, and then your employer contributes as well. They match it. Yeah.
Then. And do they have to opt out of auto enrollment? Can people opt out?
Yes, you can opt out. And now, again, caveat: I'm not a payroll specialist. I'm an accountant, but yes, I do know about this stuff. So yes, you do have the option to opt out, which means you don't want to be paying into your pension and you don't want your employer to pay in. I don't recommend that because you are losing the free money on the other side of it. However, yes, you can opt out. But what they say is every 3 years, the employer has to again enroll you into that pension scheme, assuming you're in the same company for that amount of time.
And what about people who have side hustles? Because a lot of people are in their main job, aren't they? And then they have like the side hustle that is starting, maybe property, maybe, digital products, etc., courses, coaching.
Yeah.
How do they how can they be tax efficient?
So first of all, it's worth noting that you are, again, legally allowed to earn up to £1,000 a year. I know it's not 1 million, but £1,000 a year, you are able to earn that without having to be formally registered or anything like that. Once you start to have income that is going to be, or that is over £1,000, then you're legally required to register yourself for at least a UTR number to say that you are self-employed. That is to say you are earning income outside of the PAYE system. And so at that point, you should be registering. When you register, it just means that you then need to do a self-assessment. Now, it's important to understand that you don't, just because you register as a business owner, let me not say a business owner, just because you register as self-employed or as a sole trader does not automatically affect or cancel out your PAYE income, because we're talking about side hustles now. So it assumes that you have another income. You can have your sole trader business registered and doing self-assessments and be employed. And what actually happens is that when you do a self-assessment, or when we do a self-assessment for you, for example, we take into consideration all your income for the entire year. So whether that's PAYE income from a 9 to 5, whether that's money from property, whether that is money from your side hustle or digital products, affiliate marketing, capital gains, any kind of income comes into that self-assessment form. But we also recognize where you have already paid tax, because that's another thing that people get worried about. They start saying to me, oh, but I already paid tax in my 9 to 5. Are they going to tax me again? No, we recognize how much tax you paid, and then we calculate based on, the net position. And what you find is that actually, if you've invested more into your self-employed business, your sole trader business, you can, and in some cases may even be due a tax refund because your income was lower than how much you invested. But again, that's all dependent on unique circumstances, and that would have to go through the self-assessment system.
I suppose for me, it's difficult to start a side hustle and be PAYE at the same time, because it does get a little bit complicated. So, I think that's probably why a lot of people sort of stop working and then start their business and sort of have that thing, because the fear of kind of getting caught out by the tax man. I say man.
Yes, and exactly. And so that's why there is that general fear. But what I try to emphasize to people is that they look at you as a whole. So they will look at your 9 to 5, they'll look at your self-employment, like I say, property and all kinds of stuff. It's not only sole traders or self-employed people that have to do a tax return. Even if you're a 9 to 5 employee and you earn over 100K, you have no other source of income, you actually have to do a self-assessment. So self-assessment is not something to be worried about, right? It's just a way of the HMRC or the government, being able to revise or review the tax position of any individual. And it's not just because you've had a business and you've earned money. Like I say, high rate taxpayers have to do one, even though they might not have any other source of income.
Yeah. I think one of the important things that you said is around people speaking to an accountant at the very beginning of their journey. Because I think what happens is that, if you're any kind of advisor in any space, people come to you when they've got a problem, and by which time it's actually really difficult to do it.
It's true, and we can't, and it takes longer to unpick than to advise you to do things right. So yes, the earlier the better. And I always say, what's the worst thing that will happen? The worst thing that will happen is that they will say, oh no, you're too early, not yet. Come back next month or come back in 2 months. That's better than actually hearing that you're too late. So yeah, the earlier the better.
Yeah, I think that's where I've struggled with accountants in the past. And then the other thing is, I think what was really important and key from this is that there is a difference between an accountant and a financial advisor. And a lot of the time when you're an entrepreneur, you think the person that is going to give you financial advice is your accountant. And all they do is, for me, a lot of them seem to just work for HMRC. And I'm just like, hold on a minute, you didn't advise me properly here.
Yeah, exactly. And that's one of the things I try to not do. And I still have to always caveat that I am not a financial advisor, but it's the same way a financial advisor will also tell you they're not an accountant, right? A financial advisor is not going to do your accounts for you. But like you say, I recognize that that's a need, and that's something that people need. And so rather than just asking them and doing their business accounts, I'm also trying to always find out from my customers, what are your personal goals? What are you trying to do in the next couple of years? So that we can also set up the business and the company numbers in line with those goals and those plans.
It is. I think it's a tricky one because I think people just it's the language. We don't often know the difference, especially at the beginning of the journey, which is why I think it's really important that people get to you guys quickly. But well, that's actually really for me. It's been really useful because it's the practical tips, especially with UK tax. I think one group of people who find tax really really hard to navigate are digital nomads.
Yes, 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 yes. Um, yeah, that can get complicated when you're, especially when you're moving. So, digital nomads will move from, country to country to country to country. So yeah, you should. I always say in every country you should be speaking to an advisor there. But you should also choose what country you want to have as your home country, as your tax base. And hint, hint, don't make it the UK.
What are good countries to make your base?
I can't speak to other countries as I'm not qualified to speak in those, but I hear that there are some tax-free countries, some beginning with D and ending in I.
I think that's the thing, isn't it? Because even with digital nomads, it's like I think it's 90 days that people should stay in a space before they have to. But again, it's very often quite difficult, especially during the pandemic. People got caught out a
Yes,
lot
yes, yes.
because they ended up being in places for longer, and then the tax, like HMRC will always find you. They'll always come back to you. It's like something that happened, for me, something happened in 2017, 2018. I thought it was resolved. I had an accountant at the time. I thought everything was paid, blah, blah, blah. They're still sending me letters now because they're saying this didn't. And I'm just thinking, how did it not? Because it's
Yeah.
been.
Do you know the worst? Do you know the worst thing? You're talking about 2017 and them reaching out to you in 2024. At least you're still alive. I know personally people whose spouses have passed on, and in the passing on of their spouse, HMRC are sending the spouse that is alive letters to say your spouse that is now passed away was owing us money. We need our money back. So you can imagine, even if you get away with it for years and years, unfortunately, when you pass away, they will be doing an audit of your life and your life taxes. And if there's anything unpaid, unfortunately, your spouse and your children will end up having to deal with that. So, yeah.
Is there any way? I mean, I think there's things around, like you said about the pension. Are there other ways of people making their, investing back into themselves really with that profit? Because I think there's something, things like maybe I don't know, health insurance, etc.
Yes, 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 of course. Yes, I have. Obviously, we won't have the time to go through every single valid expense, but yes, definitely life insurance, health insurance, all of that kind of stuff you should be putting through your business as a company director, but also education, right? So learning. So one of the rules with the HMRC is that you can, of course, do education and training courses and that kind of stuff. It shouldn't be for a new thing. So, for example, if you've got a tech company, you shouldn't be trying to, I don't know, learn how to skydive, right, from your company. But if you are doing any kind of training course that is related to the business that you are in, so upskilling and all of that so that you can provide new services, that is 100% valid via your business. So you should be looking into that as well, because that's a way of, essentially upskilling so that you can provide more income, but also paying for it is reducing your tax bill.
And something that I've always wondered: how do accountants decide on how much they're charging clients?
Everyone's different. Again, I won't speak for everyone, but I will speak to the ways that I know. So yes, there are some people that will charge based on a percentage of income. I don't personally think that you should charge on a percentage of income because, for example, you might earn £1 million and that might have come through via two invoices. One invoice, 500,000, another invoice, 500,000. And there you go, £1 million. And you don't have hardly any expenses. The amount of time that it will take me to do that kind of work compared with somebody who has only a £200,000 income, for example, but they've made that £200,000 via loads and loads of small transactions, complicated expenses. The two, if I charge based on the percentage of income for the £1 million person and the percentage of income for the £200,000 person, it's actually going to take me more effort, more energy to do the 200,000 than the £1 million person. So hint, hint, linking on to the next way, that some people charge will be based on the volume of transactions and the complexity of the business. So, for example, I have customers who are into property, they're landlords, right? Doing a set of company accounts for a limited company that owns property is slightly different. There's a few more pieces of paperwork and things that we need to check, because obviously, you've got a large asset and that kind of stuff. So I do charge slightly more, but it's a standard rate for that kind of business because it's complex. And then for people who have simple businesses where it's, service based, most of their things are online. They hardly even have any expenses because, they're not even having to travel or buy raw material or buy raw ingredients, that kind of stuff. It's a simpler business. So I therefore personally, I have two rates, one for a simpler kind of business, simpler standard business, and one for a more complex business. But of course, other people may charge in different ways based on different things. The other thing is also the market rate, right? At the end of the day, if accounting services are going for, I don't know, £20 an hour, most people might just decide to stay around there. They might charge a little bit less. They might charge a little bit more. So you can do it like that. So yeah, those are the different ways that people may charge. I don't agree with the first one. The second one, in terms of volume and transactions and complexity, I think that makes sense. But of course, if you're providing niche advice as well, whereby you're giving your customers extra, then you might also be charging higher than the market rate because of how much extra you're giving, right? But that's down to every individual and every accountant. I've had customers come to me and tell me that, they found an accountant that would do something for them for £150, which is like literally a fraction of the price that I charge. I said, well, you can pay £150 and you will get £150 service. And hopefully, if you pay £1,000, you get £1,000 worth of service. So,
and do you tend to do it sort of like you charge on a monthly retainer rather than doing it like they pay up front once?
So the way I do it, again, rather than a monthly retainer, I charge according to your accounting year. So if you come to me in 2024 and you want me to do your 2024 to 2025 accounting year, I, Benedicta Benny Ratio, we are responsible for everything to do with that accounting year. The price, you can pay me monthly, but it doesn't change the service. If you pay me in full, that's fine as well. But all I am committing to is that accounting year. Accountants work in accounting year. So I would never take on let's say an accountant is dealing with one half and I'm dealing with one half. That's not industry standard, because how do we measure up what we did versus the other person? So it should always be in accounting years. And so with what you call a retainer, rather than doing a retainer, for me, this is a cost for each year.
I think it's interesting in an internet sort of social media world, you see the success. And a lot of people are like, oh, yeah, overnight success. And I think a few people have said, yeah, it's taken me 23 years to become an overnight success.
Exactly.
It's not something that happens straight away.
When I went viral earlier this year in March with the podcast Savvy Wallet, everyone was congratulating me and stuff. And I was like, I've been saying this for the last 6 years. I don't think I said anything new. So it's taken 6 years for that, to happen.
Can I ask, tax and relationships, how does that work? Is it a benefit to be married?
Yes, I would say that there is, because if you do, literally from a numbers point of view, if you have one person earning 50,000 and another person earning 50,000, both of you have your tax-free allowances, 12,570. Both of you will then be paying 20% tax, right? So the remaining, let's say, okay, 50K minus your 12K allowance, let's just for sake of numbers, 38,000, right? You're going to pay 20% on 38,000, which is about 7,200 tax, yeah? On that side, and this person as well, 7,200 tax. Add that together, again, for the sake of simplicity, let's say you're paying 15K. So the two of you have brought in 50K gross, 100K, and on that you have both paid between you £15,000 tax. So that means you are keeping £85,000 in your household. Now, a single person who earns £100,000, yes, they've got their personal tax-free allowance. So let's say, for the sake of argument, 12K. So that means they've got £88,000. Now, first of all, the bit up to 50K is going to be, or 33K, I should say, is going to be taxed at 20%. So let's say 50K, 20% of 50K is £10,000. Yeah. So that's one tax bit. The extra 32,000 is going to be taxed at 40%. So now, let's, again, for the sake of argument, let's just say it's 30K, 40% of 30K, sorry, that's 3 times 4, 12. To add on the 12 to the 10K that was taxed at 20%, you've got £22,000 tax. So now this individual who earned £100,000 had to pay £22,000 tax. So that means they're keeping what? £78,000. But the other couple who had 50 and 50, how much did they keep again?
85.
So there you go. It's a benefit. I've actually been saying this, that getting married or having a partner is a life hack. It's actually a life hack.
But then you see that they don't have common law, so you would have to get married. You'd have to be.
So I won't speak to whether it's common law or married or whatever, but I just know that if you are married and there's some kind of documentation that ties you together.
Oh, like civil partnership or. Yeah,
exactly,
okay,
exactly.
Yeah.
But even with but what I've just explained, you don't need to do anything special for that, right? At the end of the day, it's your salary that was 50K and his salary that was 50K. So if you're in the same household, it just means that you've brought in more, because I assume you're paying bills and, paying the rent and mortgage and all of that together. So just as a household, whether you're legally married or not, even just as partners, you've managed to bring in and keep in a lot more. Having said that, I know some people will hear that and say, oh, therefore I don't need to go and earn more. No. You should still be earning as much as possible.
Yeah, no, that's true. But I suppose also if you're an entrepreneur and you have a business, then your partner could be your partner or husband and wife could be a director of that business as well, I assume. And then they can take out, there's an allowance.
100%. Yes. I always advocate, if you are married, put your spouse on. It's free. It's not like it's going to cost you money to put them on. And then it does mean that you can take out, obviously, again, caveat, every circumstance is different because, people will be earning different amounts. But for example, one of my customers, he's a high earner. They have a family business. The wife actually doesn't earn anything 9 to 5, but they're both on. Now, rather than him taking a salary, she can take out a salary up to, certain amounts because she doesn't have any other income. And so they can still bring that money into the household. If I earn a salary and I decide to give half of it to my partner, that's no one's business, but on the piece of paper, it doesn't show him, it shows me because I have a tax-free allowance. And it's worth saying that even on self-assessment that there is the marriage allowance whereby you can transfer especially if the spouse is not working or they're earning low, you can transfer some of your personal allowance, for the person who's not benefiting from the personal allowance, you can transfer it over to the working partner so that it decreases the tax that is due to be paid.
And in terms of Benny ratio finances, what next? Where are you going with this? How big do you want to make it?
I'm glad you asked about that because I think I said it at the beginning. One of the things I say, I'm Benedicta, your favorite accountant. I might not be the best accountant. I might not be the prettiest. I might not be whatever, but you will enjoy speaking to me, then you will enjoy speaking to any other accountant. And why am I bold and confident enough to say that? Because I have seen other accountants. I know what they're like. I know what they do and what they don't do, right? And so for me, Benny Ratio is all about plugging that gap, especially from a communication point of view. When you think about accountants, I always say this, I think about some, corner shop somewhere, damp going through the building, a little dark alley, and you're going to meet, this accountant who barely speaks to you. They barely say any words. They just literally ask you for the paperwork. You give it to them and they're like shooing you away and they'll say, yeah, I'll get it done. We don't do that. We are all about communication, education. And so actually earlier this year, I launched 3 courses in April. I launched 3 courses that are all about helping you as an individual to understand tax and get tax refunds, helping you as a company owner to understand tax and how to manage your business, and also specifically how to do self-assessment, because self-assessment is one of the most common tax requirements or forms that many people will have to do. And so for me, Benny Ratio, whilst yes, we will do your accounts for you if you want us to, and we will do all of that, we are also, or I am also, educating and providing solutions for people to understand things for themselves and ultimately be able to do things for themselves as well. So yeah, education is the next space that I'm in and hopefully helping out my customers with.
And where are you based?
So I do not have a physical office. You can't go to me in the high street. It's all virtual. But I actually found that works good because, it means I have customers, even foreign customers in other countries. And I have customers that are all over the UK, from Scotland to Ireland, down to south in London. So yeah, we do all things virtually, and we're making good use of the internet.
And how do people find you? What's the best ways to find you?
Website is www.bennyratiofinances.com. Social media on Instagram is where I hang out most of the time, and that's at Benny Ratio Finances. That's BENIRATIO Finances. And then also, I'm on TikTok as well. So yeah, just the normal social media spaces. But yeah, search Benny Ratio and you should be able to find me even on Google.
Thank you. Okay, well, that's been really, really useful.
No worries. Thank you for having me.